But one space which has been in focus has been the steel space in terms of what really is transpiring with the demand as well as the pricing scenario. So no better than JSW Steel to talk more about that. Seshagiri Rao, Joint MD and Group CFO of the company, joins in on the show right now. Mr. Rao, pleasure having you. Firstly, talk a little bit about what is it that you're mapping in terms of the Indian steel sector and the challenges when it comes to demand as well as pricing.
No, Indian steel sector, if you see the last financial year, there is a growth in the demand to the extent of 3.3%. So it is slightly lower than what the GDP growth was there. So that indicates that the investment activity is still not picked up. So that is reflected in the form of a lower demand growth in steel sector relative to GDP growth. So going forward, if I see if steel demand has to pick up, I think investment cycle has to come back, more spending in the real estate, more spending in the construction, capital goods, infrastructure. These are very essential. And also reduction in the interest rates, where the auto sector and the personal loans, housing loans, which are very sensitive to the interest rate sector. So they are also waiting for interest rate reduction where that activity can come back. So we are expecting that the easing of monetary policy will reduce the interest rates and these sectors will come back with a higher demand. And also the investment cycle, hopefully once liquidity problems are resolved, these sectors also will pick up. So we expect the FY14 would be better in terms of overall demand growth of 3.3%, which we have seen in FY13. It could be a little better than that in the current financial year.
Right. But sir, how are you looking at the government's role in this encouragement of the sector? Because as we look at it, the steps from government on curbing imports are rising each month.
No, the issues today is last year numbers. If you see, the total imports into India is 7.8 million tons, which have grown by 14%. Similarly, the exports from India also have grown by 14%. It is around 5.5 million tons. So overall, still we are the net importer of steel. But what is really relevant to note is that most of the steel companies in India today, for lack of either raw materials or power, or for some reason or the other, not able to operate to their full extent. And some of these steel companies are closed down. So that means in India, the capacity utilization relative to installed capacity is 75 to 80%. So then other side, we are importing the steel into India because we are not able to remove these restrictions for which is plaguing the industry to work at the potential capacity levels. So there is a demand in India and Indian steel companies can work or can produce to meet this domestic demand. But unfortunately, the constraints are so much which is not in the hands of the steel sector. So that is making India to import steel. It has a huge impact, not only on the current account deficit, but job creation and future investments in the steel sector in India. So it can have a deleterious impact going forward. So therefore, there is no need for India to import steel. There is enough capacity in India. It can produce quality grade steel at competitive cost. It is quite viable. So in that context, how to ensure that the dumping of steel into India will not happen through FTA routes, free trade agreements. I think that is what is to be focused right now, which industry has been representing to the government to look into those aspects.
Right. Mr. Rao, what about the ground situation in Karnataka when it comes to iron ore supplies? Because majority of the mines are still under a ban.
Category A, 18 mines have been permitted earlier by the Honorable Supreme Court. Out of that, 8 mines are operating right now. And the NMDC also is producing more in this year relative to last year. So both together, whatever is getting produced from Category A mines of these 8 to 10 mines and also NMDC, they are getting auctioned, the iron ore. So that is meeting part of the requirements of the steel industry. Then the hearings have been completed in the Honorable Supreme Court in the last month. The judgment is reserved. So we are anxiously waiting that the judgment would come, and Category B and Category C also, there will be direction from the Supreme Court. that they would get opened up and more iron ore will come into picture. So that would enable steel companies to increase capacity utilization and produce more steel. That is what we are eagerly waiting for.
Right, Mr. Rao, the murmurs of JFE wanting to, buy additional stake in JSW Steel are resurfacing in the market. Can you help us put that speculation to rest by confirming to us if there are any talks going on, and if yes, what are the kind of valuations which are being discussed between the two parties?
We have clarified earlier, and I again reiterate that there is no plan at all to dilute further stake in JSW Steel. So as per the agreement which we entered with JFE, that their holding will be restricted to 15%. So I don't think it would go beyond that. So it will be at that level. So there is no plan to dilute any equity either in favor of JFE or in anybody's favor.
Mr. Rao, any plans of refinancing your debt?
We are continuously looking at opportunities to reduce the overall cost of interest. So particularly JSW Ispat, if you see, there is a large amount of rupee loans which we earlier financed when we came out of CDR. They are expensive rupee loans, so we are looking for refinancing of those loans by foreign currency loans. We are looking at various options how to raise that money at the optimum cost. Thereby overall interest cost for FY14 will be reduced substantially.
All right, Mr. Rao, thanks a lot for joining us on ET Now today. That was some chat about the steel sector, and also some clarification coming in that the JFE is not actually looking at increasing any stake, or in fact JSW doesn't want to dilute any further. That was JSW Steel. But let's come back to markets.